Did you know there's a superstar savings account that lets you sock away money tax-free, invest it so it grows tax-free, and then you can use it for medical expenses? You guessed it, tax-free. This really is the holy grail of savings accounts, and most people have no idea how powerful it really is. It's called an HSA, and today I'm breaking down exactly how it works and how to get one. And later in the video, I'll share a super hack that you don't want to miss, one that I use personally. So if you're ready to make some big bucks and pay zero taxes, hang tight as I reveal the crazy benefits of an HSA. Hey everyone, this is AJ, your ace in the hole, and welcome to the channel where we simplify personal finance and provide tips for young adults and others just starting out. And sometimes we help uncover hidden gems in the world of personal finance. So, what is an HSA? An HSA, or health savings account, is a special savings account just for medical expenses, but that's not all. It's more like a healthcare savings account and a powerful investment tool all rolled into one. So, why all the HSA love? First off, you deposit money tax-free, meaning you get a tax deduction on your contributions. Then, invested money grows tax-free, meaning you pay zero taxes on any investment gains. And finally, you can withdraw your money tax-free to pay for qualified medical expenses. It's what's called triple tax advantage. And spoiler alert, no other accounts allow this. Now, sit tight because I'm going to cover the key things you must know about an HSA and how to get one started. First, did you know that roughly 30% of YouTube viewers forget to subscribe to the channels they watch? So if you would, please take a quick second to subscribe. It's totally free and it'll ensure you get a peek at our weekly topics. Now, back to the HSAs. For starters, you might be wondering, how can I open an HSA? To qualify, you must be enrolled in a high deductible health plan, or HDHP. For 2025, the IRS defines an HDHP as a health plan with an annual deductible of at least $1,650 for self-only coverage or $3,300 for family coverage. Now, most health plans state if they're HSA eligible, so you just need to be sure before you open one. If so, you're good to go. And parents, listen up. If you have an HDHP, you can open an HSA and use it for your kids' medical expenses as well. Setting up an HSA can be done in two ways. First, some employers offer health plans with HSAs, so you can set it up through your work and contribute directly through payroll deductions. Some employers even contribute to their employees' HSAs as a company benefit. But if not, you can open an HSA yourself through a bank, investment firm, or a credit union. The process is not much different than opening a normal bank account. Just be sure to look for low maintenance fees and good investment options, which I'm going to touch on in a minute. Fidelity, for example, offers a no-fee HSA with a vast array of investment options, but there are others. The only slight difference between an employer HSA and an individual HSA is that ongoing payroll contributions through your employer lowers your taxable income and saves income taxes throughout the year, while the individual HSA pays your tax savings back in a lump sum tax deduction when you file your annual tax return. In both cases, the HSA is yours to keep and remains your personal account even through job changes, unlike an FSA, which I will touch on in a minute. There are annual contribution limits for an HSA. In 2025, the self-coverage limit is $4,300, and for a family plan, $8,550. For 2026, these increased to $4,400 for self-coverage plans and $8,750 for family plans. Catch-up contributions, which are available to anyone age 55 or older, remain the same at $1,000 for both years. Finally, there are no income limits with an HSA, as with other similar IRA-style accounts. As long as you're covered by an HDHP, you're good to go. Now, let's touch on what's meant by qualified medical expenses and how to use your HSA money tax-free, which can be used for a lot more than you think. First, there are basic expenses, such as doctor visits and copays, dental and vision expenses, prescriptions, and various health services. But other things also qualify, such as over-the-counter items like Tylenol, bandages, and even sunscreen. IRS Publication 502, Medical and Dental Expenses, contains a comprehensive list of includable medical expenses, which I linked in the description below if you care to review. I think you'll find there is a lot you can buy with your HSA money. This type of use is how the HSA was designed, and if you choose to use it this way, that's perfectly fine. But stay tuned, because I'm going to show you how to supercharge your HSA even further. But first, you might be wondering, what happens if you use your HSA funds for non-qualified expenses? There are penalties associated with an HSA if using it for non-qualified purchases. If this occurs, you're required to pay income tax on the withdrawal, as well as a 20% penalty, at least up to age 65, in which the 20% penalty no longer applies, and you can then use this money as ordinary taxable income. That said, most HSAs do allow you to correct a mistake, but only if it's caught by the end of the tax filing for that year. Simply file a mistaken distribution form with your HSA provider and replace the funds. The most common mistakes are using HSA funds for an expense you thought was qualified but was not, or you accidentally selected the wrong payment card when making a purchase. In fact, this very thing happened to me. Most HSA accounts provide you with a debit card to use for HSA payments. In my case, I accidentally grabbed my HSA card instead of my credit card to make a general purchase. I simply completed the appropriate form and reimbursed the funds to my HSA, and the error was corrected. Just be sure to maintain all forms and documentation in the event of a future audit, which leads me to my next topic, receipts. You should always ensure you use good record-keeping practices when it comes to HSA payments. Keep all receipts, credit card statements, and any other documentation that validates HSA expenditures in the event there's ever a question regarding your reported expenses. Each year you have an HSA, you'll file a Form 8889 with your tax return, which reports both contributions and distributions. Keeping good records ensures you have the appropriate backup to support your HSA tax reporting. Now this brings us to how to supercharge your HSA. Once you deposit money into your HSA, you can place those funds into a variety of investment options to help grow your account even further. Investments such as mutual funds, exchange-traded funds or ETFs, stocks, bonds, you name it. Keep in mind, this is something you must actively set up, otherwise your money just sits. At the end of 2024, there were over 39 million active HSA accounts. However, sadly, only 3.5 million or 9% of accounts had money invested, the rest just leaving their contributions in cash form, earning next to nothing. And as a reminder, any earnings made from investments in an HSA are 100% tax-free, meaning 91% of HSA account holders are missing out. So make sure you're one of the 9%. A quick side note, with the passing of the recent One Big Beautiful Bill Act by Congress, beginning January 1st, 2026, bronze and catastrophic insurance plans, which make up 30% of all medical insurance purchased on the ACA or Affordable Care Act marketplace, will now qualify as HDHPs, expanding HSA access to an estimated 7.3 million individuals. Now comes the super hack. As I mentioned at the beginning of the video, no other account is as tax advantaged as an HSA. With that, one way to maximize the benefits of an HSA is to use it more for investing and building wealth rather than a basic medical savings account, at least during your younger years when medical expenses tend to be the lowest. Simply pay for medical expenses out of pocket, leaving your HSA funds invested and growing when it matters most in your early years, taking full advantage of years of compounded earnings, all tax-free. Now, here's the secret sauce to this strategy. Even though you're paying for your medical expenses out of pocket, still be sure to keep solid records and receipts of these expenses. You see, as long as you have these records, you can reimburse yourself from your HSA at any time in the future. For example, let's say you had a $1,000 medical bill today and you decided to pay out of pocket to keep your HSA funds growing. 10 years from now, you could pay yourself back from your HSA for this expense, allowing that $1,000 to grow all that time, which by the way has grown to over $2,200 assuming an 8% return. This strategy is the ultimate savings hack that can only be accomplished with the advantages of an HSA. The only thing here is that you can't reimburse a medical expense that occurred prior to opening your HSA, which is another reason to open one as soon as you have the chance. Now, one important point to call out is with a similar employer account that is often confused with an HSA, which is an FSA or flexible spending account. An FSA acts almost like an HSA in that contributions are pre-tax and are not taxed when used for qualified medical expenses, but there are some major differences. With an FSA, money must be used by the end of the tax year or it's forfeited. Use it or lose it, as they say. Also, an FSA does not remain with you if you leave the company, and there are no investment options. An FSA is basically a tax-free savings account. I only bring this up because so many confuse the FSA with the HSA. Now, I must call out that a HDHP is not required to open an FSA, so if you don't have an HDHP, in that case, an FSA may be a good option in lieu of an HSA. There are some other considerations associated with an HSA for later in life, for example, regarding retirees and those approaching Medicare age. But these are beyond the scope of this video, as this is focused more on those earlier in life who may be considering starting an HSA. However, let me know in the comments if you're interested in a more expanded view of HSAs, and I can do a follow-up video if there's enough interest. So, now you know why I think the HSA is the ultimate savings and investment tool, and why you should see if it makes sense in your situation. No other account offers the tax advantages of an HSA, so it should not be overlooked. But again, it's not a given. There may be a situation where an HSA doesn't make sense, as everyone's financial situation varies, so be sure to seek advice if you're not sure. Meanwhile, check out my previous video that compares other similar tax advantage savings options by clicking here to see where an HSA might fit amongst these within your financial strategy. Finally, I really hope you found this video helpful. If so, please share it with others that might also benefit, and be sure to like and subscribe so you don't miss any upcoming videos. And I hope to see you in the next one. This is AJ, your ace in the hole. See ya!